It is 5:07 now. Many Americans are watching their investments dwindle. Stocks, 401ks, even college savings accounts are taking significant hits.
One estimate shows that the average 529 plan lost a few $1,000s this year. In a special Eye on Education this morning, I take a look at the market's impact on the state's college savings plan. Jim and Barb Buvid love helping care for their grandkids.
They are quite a handful.
When Jim retired, he started planning for the children's futures by contributing to Wisconsin's college savings plan, EdVest.
When I started it last year, I put money in, and of course it went to work right away. But of course now with the downturn of the markets, it went down a little bit.
Jim is certainly not alone. It's estimated the average 529 plan in the U.S. lost more than $4,000 in the first half of the year. Money in an EdVest account can be used to pay tuition, room and board, fees, books, trade school, apprenticeships, even up to $10,000 in student debt. And the money you put into it is all tax deductible. Linda Lambert oversees the program.
A 529 college savings plan is a qualified tax advantage program, and it's designed specifically for education.
She's encouraging investors to keep contributing.
So I would say don't make adjustments. I would say stick to your plan.
General state of the economy right now is...
We also sought out some expert advice from financial planner Sue Peck on how much to put into a 529 plan when the markets head south.
A lot of people are very strongly saying 100%, I want to take care of it 100% because I had a lot of student loans and I do not want my kid to have to go through that.
She tells her clients it depends on how old the student is. If they're already in high school, there's not much time for the account to grow. Plans for younger students look much better.
If you are still younger or if you are still accumulating those assets, this is a great opportunity because the market will likely go much higher than it is right now.
As for Jim, he plans to ride it out for his grandkids.
I've gone through 3 of the worst downturns in the market, and I was one of those that was gutsy enough to leave my money in, and it always came back.
One big question about EdVest accounts is what happens if the beneficiary doesn't go to school? Well, you can transfer the balance to another family member or use it yourself to pay off your student loans or go back to school yourself.
A lot of advice there. Interesting.
Yeah, I've got 4 accounts myself, so this is something that I had my eye on this year. Watching that account go down and down and down, and myself thinking, what do I do with this? And to hear Sue Peck there say that, hey, look at it as an opportunity, and to hear Jim talk about, hey, we've been through this before, ride it out, money always comes back. We're so focused on the short term, and when investing, you got to think long term.
It's hard to do that. Definitely hard to do that when you're watching those numbers drop.
It's really hard. It's real money. I mean, the average 529 lost $4,000 this year.
Yeah, that's crazy. And imagine if your kids were older. Yeah, so
bad situation.
Good advice. Good eye on education.
Patience. Patience.
Another life advice here. Little tidbits for you this morning.